Hello there everyone, I hope you're having a beautiful day. Today we'll be exploring the next episode of the Trading Basics series. So now, what we've done is we've looked at EMAs previously. Now I like to look at the Fibonacci Retracement tool. So in previous episodes we learned about candlesticks, we learned about support and resistance, and we learned about how a trend line is drawn and how a trend works. So now, if we know that a trend always pushes upwards and wants to make old resistance new support, and if we know that those EMA lines can run across it for more support and resistance, then we can also try to predict the places where you will find higher lows. So this is by far my favorite analysis tool, and it is the Fibonacci Retracement tool. So don't get confused by the numbers, don't get confused by the weird name that it has given, but please just listen to this simple theory. Okay, so the way I like to explain the Fibonacci Retracement tool is as a ruler. And this ruler measures the beginning of the push at the low, then you measure at the high, and then you're trying to calculate where this pullback is going to be. So now, on the top left of your screen, you'll find Fib Retracement, and then what we can do is we can draw our Fibonacci Retracement tool from beginning of the push to the end of the push. I use these settings for my Fibonacci Retracement tool, so you can try to copy these settings. If you're not using these settings, your Fibonacci Retracement tool will look like this. This looks like a rainbow Picasso. I like to have it a little bit more clear, so I use these settings that you'll see right here. So what we can do is we can measure the distance that it takes for a pullback to reach that higher low. So what we know is that our market is being determined by traders, right? And if there are different traders interested in a specific price point, then there will be a reaction to that price point. It can either be a bearish reaction or a bullish reaction, but there will be a reaction on a price point if people are interested. So now, if we know that people can be interested in a specific price point, then we know that if everyone is using a Fibonacci Retracement tool, that everyone will be looking at the same levels for a pullback. Okay, so this is like the weird thing that had to happen in my mind before I could fully understand why this would work, because it just seems so simple. But if everyone is looking at 50,000, for example, as a price point, then it can also mean that 50,000 will just be a support or resistance level, right? And just like that, if we use the Fibonacci Retracement tool, it will have the same philosophy. So that's just a little bit of background story that can help you to better understand this Fibonacci Retracement tool. And now we will talk about the different levels that you'll see on it. So basically there are two ways of drawing your Fibonacci Retracement tool. You can either say that this is the beginning of the push and this is the ending of the push, or you can say that this is the beginning of the push and this is the end of the push. So basically both are correct, but they're just based on different time frames, right? For example, if a 1 hour push only comes from here to here, then a daily push might come from here to here, right? It's just an analysis on different time frames. You'll find it works on different time frames. Don't worry about it. Okay, so now what we can do is we can measure the distance or measure the levels where a higher low will be in an uptrend, and if we flip this, then it'll be a lower high in a downtrend, right? Then you'll have a high right here, you'll pull it all the way to the low right here, and then you'll try to see your retracement right here. Okay, so if we know these basic fundamental principles, we can better understand the Fibonacci Retracement tool. So knowing these basic principles, let's try to apply it in the markets. So what we see right over here is an impulsive move to the upside. Now, you'll see different levels on my Fibonacci Retracement tool. I'm just going to draw right here. so I can explain this even further. So if you have an impulsive move, often you will see that the retracement will come to this level. This is called 0.382. Now this is just, don't make it too difficult for yourself. This is just a level where if a move is impulsive, you will often find new support to continue the uptrend. So if a move wants to make a deeper retracement, you will often find that they will go to 0.618. This just means, okay, we made a push to the upside, we made a deeper retracement. This is the level that most traders are watching, by the way, is the 0.618 to 0.66. We also call this the golden pocket. So if you are making a deeper retracement, or you're breaking 0.382, chances are that you will go to the 0.618 to 0.66 or the golden pocket. Then you also have at the lowest place 0.786. If you're breaking 0.618 to 0.66, you'll probably make a retracement towards 0.786. So now let's put this to the test a little bit. Yeah, it will work often, but it won't work every single time. So if we look at this impulsive uptrend right here, let's try to measure it out from the high. You'll see that my mouse is right here. This is because I want to make these levels more clear. Yeah. So the line that I'm trying to draw to the high is the white line with the 0. So I'm pulling my Fibonacci retracement tool from the 1 to the 0, from the left to the right, the 1 to the 0, from the left to the right. And that can either be in a downtrend, so that would be like this, for example, from the left to the right in a downtrend. And then you'll have your Fibonacci like from the 1 to the 0, and here you have it from the 1 to the 0 as well, but then in an uptrend. So what can we see? We see that an impulsive move has happened to the downside. We see that this trend line over here has been broken, if we would have drawn it in correctly. And we see that to the absolute perfection, we have reached the 0.382. So we can also see, for example, if we look at this place right here, let's just try it. You see, I'm taking the low right here, I'm using magnet mode, taking the high right here, I'm using magnet mode, I'm just drawing it to the right so you can see what's happening here. Yeah. So what you will often see is that there's a reaction on the price point, but then even though there's a reaction, we still push through. Now, that doesn't matter. But it just means that probabilities are happening, right? There's not 100% probability that something will happen, but very, very often you will see a reaction on this, on these levels, right? So what did we see? We started right here. Then we made a retracement. Oh, we made a retracement right on this level right here, 0.382. Then we broke it. Where do we stop? 0.618, the golden pocket. Then we made a retracement up. We moved further down, and then we go to 0.786. Eventually, we still break the lows right here, and then we make our impulsive move to the upside. But this just shows you the power of the Fibonacci retracement tool, and I hope you will use this power well, use this power with responsibility, and I will hope that this will help you with your analyses. So a longer video than normal, but a full explanation on my vision on how to use the Fibonacci retracement tool. Test this, use it in your analyses, and I will see you in the next one.